Welcome back. This is the Rise and Fall Trading Hub, and I'm here with another strategy. So in the last part we were dealing with the three white soldiers, and for the three white soldiers we said a few things that I feel I should repeat. I should insist on one or two things concerning the three white soldiers. So we said that it's formed after a downtrend, and I insisted that you should make sure that there is a clear downtrend. If possible, let it be like for instance a long downtrend. So there should be a clear downtrend. That means the three white soldiers, that strategy works better when there is a support. So there has to be a region of support, right? So when there is a region of support, that's when it works best. Remember, we also said it can be formed along a trend, but we said when it's formed along along the trend, don't use that because you may have some losses. For instance, this candlestick, and this candlestick, it's being formed along a trend. It's also like three white soldiers, but you see it's not at the support, it's not after a downtrend, so you avoid that. So I've said it has to be after a downtrend. Let there be a long, a clear downtrend. I'm just using this for the purposes of explaining this, and then ensure that the candlesticks you are using don't have a long wick. They should be big candlesticks with short wicks. The shorter the better. So don't go for the candlesticks with long wicks or the small candlesticks, the donji and the rest. So avoid that. So if you really want this strategy to work for you, and I said these are not very common, and when you look at your charts you may think that there are so many instances of the three white soldiers, but they are not common. Why? Because those conditions have to be met. So the first candlestick should be a bullish one, and then the second one should open within the body of the first candlestick, or around the region where it closed. The first one closed. So for best results, look for the second candlestick opening within the body of the first one, like this one. The third one opening within the body of the second one. So, and those candlesticks should be if not same size, then they should be, the size should be increasing, or maybe the same size. And then we said, for instance, this one is 30 minutes time frame. So if I was to enter a trend, I would enter a trend after the close of the third candlestick, and I would use 1 hour time frame. So I've analyzed using 30 minutes, but to enter a trend you use double of the time frame you have used to analyze, to take care of a situation like this one here. This the retracement candlestick here would be taken care of by the first 30 minutes. So once you enter the trend here, the 30 minutes would be used to form this red one, and then the rest of the 30 minutes now would be giving you the profit. So I feel like you needed to know that look for where there is support. That means once you get this region, you can go back to the market, see whether this region is a region of support. Once you realize that it's a region of support, now you can look for the other conditions and enter your trend. Now today I want us to look at the other pattern, which is the opposite of the three white soldiers. Is actually called the three black crows. The three black crows. So it's the opposite of that. So this one basically forms after an uptrend. So there has to be an uptrend, and very important, This one is formed at the region of support, so you have to go back to the market and see whether that region is a region of support, not support but resistance. I'm sorry, resistance. It should be a region of resistance. So after an uptrend, then the first candlestick forms, followed by the second candlestick, which is bearish, opening within the real body of the first candlestick, and the third one opening within the real body of the second one. So enter a trend using twice the time frame. This, of course, in this case now would be the retracement candlestick. This green candlestick is what we are calling, and they are very dangerous, retracement, the retracement candlestick. So what you do is you enter a trend using twice the time frame you've used to analyze. Like in this case, we would have entered the trend using 1 hour, so 30 minutes will take care of this, and then 30 minutes will give you a profit. So this one is the 3 black crows. I still insist, this one is formed when there is at the resistance area. Then the 3 white soldiers is formed when there is the support. Very important. Make sure you don't forget that. So I've said they are not very common because those conditions have to be met. So looking at a situation like this one, this candlestick, and this candlestick may not be the 3 white soldiers. Why? Because if you look at this candlestick, the second one, it has long wicks. These candlesticks have long wicks, and the second one is not big in size. So it has to be, the size should be growing, or maybe the same size as the first one. So that's very important. My advice to you is before you enter a trend using your real account, specifically for this strategy, first of all, practice using the demo account. Once you gain the confidence in it, then now you can try this using your real account. But this strategy works, especially if you get those patterns forming and all the conditions being fulfilled. It will give you good results. The first candlestick, the second candlestick, the third candlestick, you make sure that it is formed where there is resistance. That is for the 3 black crows. It will give you the desired results. Remember, we also said it can be formed after a consolidation. For instance, in this case, there is a consolidation, and then there is a 3 white soldiers. So this is a region of consolidation, and then there is some breakout. So this is a 1, 2, 3, the 3 white soldiers, and so that one is another good example. So there has to be a clear for the 3 black crows. There has to be a clear uptrend. For instance, this one may not be a very good entry point, though it's an uptrend. It's a look at this region here. This region, yes, it's the resistance area. The first candlestick, the second candlestick, the third one. This is a retracement candlestick. So this candlestick will give you a profit, but I'm insisting on looking for a clear uptrend. That one will give you good results. So I hope you understand this. I'm also happy for those of you that are giving me feedback. In case you need any resources that I have, then I can help you with that. So try this out using your demo account. Practice until you feel that you are confident enough, and then you can also share the results. And thank you so much. This also is another example. is a downtrend, the first candlestick. So this one is also the 3 white soldiers, but I don't like this second candlestick, and I also don't know whether this is a support region. So you have to come back once and see whether it is a support region, so that you can enter using the 3 white soldiers. Okay, so that is what I have for you today. So I think in the next part I'll be dealing with something else. So see you and thank you.